Hello, my name is Michael Glass from emini-trading-coach.com, where we focus on trading high probability trading setups. And before we begin our video, we always want to talk about our disclosures. Any symbols that you see today should not be inferred as a trade recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose your money. Any strategy, systems, backtesting we do is just to show the potential of a strategy. Future results are not guaranteed. Any investment decision you make is solely your responsibility. Trade at your own risk. So, we're going to look at our wrap up for the week ending on Saturday, February 12th, 2011. And let's look at the week that was. Well, all three major indices did end up for the week. And you can see all are just about 6% for the year, with the Dow actually leading right now. That's certainly interesting. The key events of the week is that we did start off the week a little bit lower off of some of the Cisco news. 9 out of the 10 major sectors rose this week, but we were able to close the week for a gain. We did have some overseas news. Some of the lending increased in China, which also helped to a little slow start to the beginning of the week. And of course, we have all the geopolitical concerns going on in Egypt with the President Mubarak stepping down finally yesterday, which blasted the market up into the heavens. So that certainly was good for the market. Cisco announced a disappointing outlook for 2011, lowered their guidance. And then yesterday we had, or was it Thursday? NYSE was halted as it began merger talks with Deutsche Bank, and that will make the merger the largest exchange in the world. And we had the lowest initial claims since July of 2008. For this upcoming week, we have nothing big on the earnings. MGM, Dell, Deere, First Solar. As far as economic events coming up this week, we do have the Fed minutes on Wednesday. But again, another light week of news. The sentiment is up. The market won't go down. So, we'll see if that will be able to withstand. But notice that the NASDAQ, which has been leading us for really the past year, 2 years, is slowing down a little bit. So it'll be interesting to see that with, again, no catalyst coming up, will that move higher be able to continue with no catalyst? The Mubarak stepping down Thursday, Friday, the rumors and actually happened, propelled the market higher. So we'll see if we'll be able to continue that move. Let's pull up the charts and, actually before we pull up the charts, we got to talk about it, which is obviously we're in an uptrend. Confirmation is closing above 1331, which is the wick from Friday. Resistance is all the way up at 1355. It's just, we blew right past that psychological barrier of the 1300. Support's going to be down there at 1312. We also have the 10 and 20 exponential moving average acting as support. And we don't really have that much going on as far as points of interest. There's nothing in between where we are now and up there. Again, we haven't been here 2 years. So, the market profile train of thought is that if you went fast through price levels going down, you should move up back through those price levels fast also, which is kind of what we're seeing. So let's pull up the charts now and take a look. Okay, so here we are looking at the S&P 500 on a daily chart. Actually, let me shrink it back down. Just look at that. Look at this. This is our August low, and just very nice indeed as far as an uptrend goes. As we blow up a little bit, again, what we've been talking about, and we emphasized this last week, is that our indicators are overbought. But the important thing is, look, we've really been overbought since January. With a couple dips out of it. So just because we're overbought doesn't mean we can't go higher, but you do have to be cautious, and you need to be, understand where your stop should be. You need to understand how to protect yourself, because at some point the market does have to pull back a little bit to take a breather. But again, once we got into overbought levels, we pretty much stayed there the whole way. So on our daily charts, we are overbought. You can see our previous resistance is now support at this 1315, 1312 price level. Way up here. We drew this line last week. This is our 1355, 1350-ish resistance level that we drew off the monthly charts. The green line is the 10 exponential moving average, acting as support. By just as we pull back on Thursday, if you would have bought that 10 moving average, you would have done great. And then our 20 right below that. And again, as we'll look at some other charts, there's really nothing in between here, so that's why I don't have any real points of interest. Let's broaden out our view and go to our weekly charts. And again, we look over here and come right on up. You can see there's not much going on. This is really our last one, and that was our 1312. And then we came in here. We will go all the way up here to 1440 to really, and so that doesn't do us any good. Come down to this one, that's 1391. So that's why we're still sticking with last week's 1350-ish as our next potential resistance. Now here we are, really for the past, again, January showing in our overbought price level range. We're doing that on a weekly. For at least in January as it began, it was just a daily, but now our weekly and our monthly are getting overbought. So that's why I have to say you have to protect yourself and be careful. RSI is just about to get there on the overbought level on the monthly chart. MACD has a little more to go. Stochastics are already there. And again, this is where we drew our 13. We matched up our wicks here, and that's how we came up with our next resistance level. Obviously our charts are bullish, and we can keep on going up as far as we want. But we have to be cautiously bullish because our indicators are firmly, daily, weekly, firmly overbought. Monthly, just a tad overbought. There could be a little more room, but again, we have to be cautious and we have to pay attention to what our catalyst is continuing to be, especially next week when we're light on earnings and light on economic variables. As we move on to the education portion of our video, we're using the book Trade Your Way to Financial Freedom, and we kind of summarized and finished up our setups. Chapter 7, we're moving on to Chapter 8, which is about entry and market timing. But he does kind of review a little bit about what the whole entry and why you want to focus in on market timing. And he says basically the purpose of a signal is to improve your reliability of your system. You don't want to just go long to go long. You want to time the market and find the proper place to go long. But he says that 95% or more people attempt to design a trading system simply on finding that great entry. And it's not just good to have a great entry because we have found that without proper money management, without proper trade management and position sizing, you can find a good entry but not have positive expectancy. You can get stopped out. You can have your losers taking out more than what you're making on your winners. A good example of that is that I've been watching a couple of people and they have much longer profit targets. They have big ones, 3, 4, 5 points, which is fine, and I'm all about that. The difference is they try to get all those points, whereas I'm position sizing and dropping some lots off as we go higher, and they're getting stopped out, for 1 or 2 points, whereas I'm dropping off, at 1 point taking some profit, 2 points taking a profit, and using a trailing stop so that I'm not giving up all that gains. There's nothing like being up 2 points and then being stopped out for a 1 point loss. That just doesn't make any sense. So you can have a negative expectancy, you can have a great system, you can have a great entry, but if you don't have the right position sizing and the right trade management, you can have a negative expectancy on your system because you're getting stopped out when you could have locked in some profits. So the key, he says, to making money is having a system that has a high positive expectancy, using the proper position sizing model to take advantage of that expectancy, knowing that my system usually gets me 3 points. I'm going to just drop some off and then bring my stop up to break even just in case we do a pullback. Entry only plays a small part of the game into making money. Managing the trade is, some people say that if you can manage a trade, you can even get a bad entry. Of course, you got to have the bank account to do that, to handle in case you take a little heat. So we're going to move on, and next week we're going to talk about 2 of the keys to market timing. But this is just a general overview to understanding that timing the market is important, but being able to manage a trade is just as important. So, you guys know that we are on YouTube and Facebook and Twitter. Emini-coach on Twitter, emini-trading-coach on Facebook and YouTube. We got our great 5-part video course that's free on developing high probability trading setups, which will give you an introduction to the information that you're going to find in our video curriculum. Again, we're not trying to slam you with $5, $3, $2,000. It's only $250. It goes into building blocks of trading, technical analysis, chart patterns, trade mindset. Then it gets into the trading plan components and talks about all the trading setups. And it comes with one free coaching session. Because again, the reason that we're not trying to overhype and oversell you on the system is because we believe that the true change to your profitability, your trading potential at the end of the day is not the system, but it's your trading mindset. And our coaching is about giving you that psychological capital that you need to pull the trade, to manage the trade, and be happy at the end of the day. We got a great future broker that has intraday margins as low as $300. And you get 20 free trades if you sign up through us. And of course, we've started our Forex blog with the same great content, same great videos, but with an emphasis on Forex. Because we know at the end of the day, it doesn't make a difference if you're trading futures, Forex, if you have this system, this indicator, or my indicator. If at the end of the day you're not pulling the trigger, you're not going to be a profitable trader. You got to have the trader's mindset, and we at Emini Trading Coach are all about helping you develop that. Thanks, guys, and I'll see you next time.